Now adjust the volume control so that the sound can be heard in all parts of the room.
This is the Protect Your Assets podcast.
Mr. Sandman,
You get the idea?
bring me a dream.
It's on the internet.
Make him the cutest that I've ever seen.
Go on.
Give him two lips like
It's like no cheese I've ever
and
tasted.
tell him that his lonesome
Here's the
nights
Sandman.
are over, Sandman.
Are you planning on collecting Social Security?
Don't have nobody.
Will it be there to pay you the benefits you've been waiting for when you go to turn it on? Or if you're collecting it now, will it run out? Did I get your attention? Good. Well, then you're in luck, because today we're going to be talking about a couple of secrets regarding Social Security that are coming up. You're going to definitely want to know about these. Sound pretty good? Good. Well, stick around. Good morning. I'm David Hollander, your host. This is Protect Your Assets Radio. For those of you just joining us for the first time, welcome. People around here, you hear the jingle, they call me the Sandman. And that's because I help my listeners sleep well at night by answering their most troubled tax, legal, and financial questions each week. And that's because I've been running a tax, financial, and legal firm for, well, over 30 years. You can always ask me a question. Maybe something comes up during the week. I get these all the time, and I love them. Thank you for sending them. You don't know what to do. Something comes up. pyaradio.com. Questions. Send me an email. Questions at PYA, stands for Protect Your Assets. pyaradio.com. So I was just talking about Social Security, because just this past week, even though it was a short week, we were doing a talk show on Social Security, and one of the guests, Eric, he started asking me all kinds of questions about how he should take his Social Security, when he should take his Social Security. And if you think about it, every time you received a paycheck, you were paying into the Social Security system. But what do you really know about it? I know if you're like Eric, you get your statement from the government maybe once a year. Right now, you probably aren't getting it. You have to go online and get it because they don't send it to you anymore. And they have 3 options on there. And so that's it, right? Well, wrong. If you're a 65-year-old married couple, did you know that there are potentially, get this, 1,379 different ways to collect your benefits? That's right, you heard me, 1,379. So here's the bottom line. If you give me the next 45 minutes, you too can develop a strategy as to how and when you'll take your Social Security benefits. So stick around for the entire show today, as I'll walk you through what you'll need to know about Social Security. Now let's get started. Well, it was a short week overall in the market, but guess what? We had bad news, and the market followed up with some performance. Let's find out why. So the Dow closed up for the week 0.7%. Year to date, we're sitting about 4.5%. S&P had a decent week, up 2%. Closing year to date right now, up 16.7%. NASDAQ up 3.5%. Another good week. Year to date up 22.3%. The international index had some life back in it again, up 1.5%, closing out year to date 5.1%. The 10-year Treasury, this is where the action was, so I'm going to explain this to you. It closed at 4.28%, down for the week 0.1%, so a tenth of a basis point, which is in the fixed income world. It's not a bad move. And oil closed at 83.12, bonds 97.58 year to date, off about 0.4%. So the general trend on the yield curve, I talk a lot about the yield curve and why you should care if you're renewing your CDs, those 9-month and 1 year CD rates. Here's what happened this past week. So during the week, we had 2 indexes come out, the ISM Manufacturing, the ISM Services. Well, these are things that just measure things in the economy, growth, if you will, froth, stuff like that. They were out below 50, both of these indexes. And anytime you have both of these below 50, that's a sign that things are cooling down, that the U.S. economy is slowing down. So we saw that. And so usually the market doesn't like that, and it reacts in a negative way. Well, then Friday was a short day. I know we had the 4th of July holiday. I hope you enjoyed it. But Friday was a pretty decent day in that the unemployment rate rose to the highest level since late 2021, a 4.1% uptick. And we haven't seen that for a while. So the actual non-farm payroll jobs increase was 206,000. This was in June. So why would the market like that? Well, because the market now is betting that the Fed, Chair Jerome Powell and his colleagues, are going to cut rates as soon as September to alleviate the fears of a cooling market. And that should be beneficial for stocks. So that's why stocks are still trading at all-time highs, and that's why you saw a little bit of this activity I'm talking about here, a little more life in the market, if you will. I don't know if I'm convinced. I mean, my 2 cents of it is that I think that the election is going to continue to get interesting. So getting back to the subject of the day, we are going to be talking today about Social Security. And the reason you should care about Social Security is because they are constantly looking at things that could change it. For instance, if you go look at the recent report, this just came out in May, the trustees who produce annually a report, you can go to the Social Security website and you can check it out and see what your benefit is. I don't know if you've ever done this, but I would recommend you do, because that's how you figure out what your statement says. How do you find it? You go online. We go to ssa.gov. That is the Social Security website, ssa.gov. And you can find out all kinds of information there. First of all, you can find out what your Social Security account looks like. There's a section there in the middle where you can click it, and it can start a dialogue where you can pull your current statement. If you don't do this once a year, then I recommend you do it now, because it has a lot of good information that's unique to you. For instance, how much credit have you earned? How much did you declare each and every year that you were working? You should be looking at those things to make sure that it's right, because it really is up to you at the end of the day how you access your benefits. And if you're not looking at it, well, believe me, no one else is. So you need to do that yourself. And so the way you do it is you go to that website, again, ssa.gov. You set up an account, and then you get your statement. It's downloaded to you in a PDF format, 4-page document. The first 2 pages are probably the most interesting, so take a look at those closely. And if you're like Eric, who was asking me a lot of questions this past week, you'll see there are 3 options that show when you get your Social Security. And like I was just saying at the start, that's not it. In fact, if you're a married couple, you're 65 years or older, there's 1,379, you heard me right, different ways to take it. And so the next question is, well, how should I do that? We're going to get into that today's show, because there is a lot to talk about when it comes to this subject. And according to this recent report from the trustees, it just came out in May, there are some updates that you need to know about. So, if you care about Social Security, if you saw what the administration just said on their website, go ahead and check it out if you haven't. And if Social Security is important to you, or you want to collect it and you want to get as much as you can because you did pay into it, well, find out what's coming in the future and how you should be thinking about it when I come back. You are listening right now to the Protect Your Assets show. This show is with the Sandman, David Hollander, that's me, and we will be right back.
Take the first step toward reaching your financial goals and get the information that can help you live a confident retirement. That first step is going to pyaevents.com and signing up for our next free event. That's pyaevents.com. Now back to Protect Your Assets with David Hollander, the Sandman.
Welcome back. I am David Hollander, also known around here as the Sandman, and you're listening to Protect Your Assets this morning. People around here, they've been calling me the Sandman for quite a while, and that's because I help my listeners sleep well at night by answering their most troubled tax, legal, and financial questions each week right here. And that's because I've been running a tax, legal, and financial firm for over 30 years. So how and when to take your Social Security? Well, that could be one of the most important decisions you make about your retirement income. Some people rely heavily on Social Security, Some look at it as, well, icing on the cake. Either way, I know you want to receive the most you absolutely can from Social Security since you paid into it all those years while you were working, and you want to make sure Social Security is actually going to be there for you when you need it. Well, good news for you today is that's what we're talking about this entire show. If you're approaching retirement or you're already there, you are our people. And on average, you and I work 90,000 hours. Think about that, 90,000 hours during your life. According to a 2024 AARP survey, if you are 50 years or older, then 90% of you think Social Security is important. It is intended to supplement your retirement savings. Remember that. It's not designed to just start paying you exactly what you made while you were working. No, it's a system that again supplements part of your retirement income. And about half of all persons over 62 will get at least 50% of their retirement income from Social Security, according to the Center on Budget and Policy Priorities. So many of our clients that we speak to use Social Security as part of what's known as the three-legged stool of retirement income. And this is a concept you can read about, the three-legged stool, but it's something where you could use a pension, you could use Social Security, you could use distributions out of your 401k or your IRA. Those are the standard three-legged stool. A lot of people don't have pensions, and that's where the 401k supplements the pension, and then you have your personal savings, which would make the third leg of that three-legged stool. Again, if you are thinking about your retirement income or you're trying to design retirement income right now, well, one of the benefits that you have, since you worked in this country, you paid benefits, and it is your absolute right. It's Social Security. And that Social Security benefit that you're going to receive has increases in it. And if you do it right, it actually has tax advantages too. So we're going to talk about that this morning. And so let's start out with this thing called the Social Security cost of living adjustment. This is also known as a COLA. I don't know if you've ever heard of this term. No, it's not the Pepsi Cola. It's a cost of living adjustment. Silly. In addition to meeting its current obligation, the Social Security Fund must also account for the cost to live in this country, and it has to keep pace with that cost. So to help beneficiaries maintain their purchasing power, the Social Security Administration announces the COLA for the next year's benefit. Now, the yearly adjustment is based on the change in the Labor Department's Consumer Price Index from the third quarter of the prior year to the third quarter of the current year. So the COLA for 2024 is, you may want to write this down, it's 3.2%, which works out to an average increase of $55 per check for the nearly, get this, 67 million Americans right now who are receiving benefits. This increase began with the December 2023 benefit, and it was paid out in January of 2024. So have you ever figured out how much money you make an hour? Well, it's kind of easy to do that. Here's what you do. You take your gross annual salary, and then you divide that by, get this, 2,080 hours. How'd I come up with that? Well, if you're working 40 hours a week, multiply that by 52 weeks, and you get 2080. Okay, so for example, if you made $75,000 a year, you make about $36 an hour. So earlier I was talking about this. Write this down, please, this website, ssa.gov. One of the things I'm going to ask you to do is to go pull your statement. So when you get to that website, you're going to see that towards the middle of the page, it says My Social Security Account. What you want to do is you want to click on that, and you want to go through the questionnaire. Now, this is unique. They're going to ask you questions that they know about you from you filing your tax return. So the ability to hack or commit fraud is greatly reduced because Social Security is all over that. They want to get you your report. So you go through the questionnaire. They will email you, or you can just drop in your box. It's a PDF of your actual statement that you used to get in the mail. I remember I used to get them and they stopped coming, and I wonder why. Why are they not coming anymore? Well, the government's trying to save postage. That's why. So now they make you go get it. So anyway, I'm all about them saving money. Okay. So anyway, you have to go get your statement. You download it in a PDF, and then you actually have the report, and then you can take a look at it. Now, what I want you to do next is take that report, and then you need to get a copy of Chapter 6 of my book. What I'm going to do this morning, let's face it, it was a holiday. I want to go ahead and reward you for listening. Here's what we're going to do. We're going to give you today Chapter 6 of my book called Protect Your Assets. I've actually published a couple books now, so this is the one called Protect Your Assets. And in that book, Chapter 6, I break down Social Security because it's very complex. I'm going to cover a lot of it today, but we just don't have time for the whole subject. So if you want to get more information on it, I would, again, recommend you pull your statement, sit down with that and my book, Chapter 6, and start looking at ways to create more Social Security income for you, because it is complex and you really shouldn't go it alone. So to get a copy of Chapter 6 of my book right now for free and find out some additional strategies that I'm not going to talk about this morning that you can implement to increase your Social Security and retirement, here's what you need to do. Call this number right now, 866-PROTECT. We have operators standing by right now who will take your call, take your information, and get you a copy of Chapter 6. It's just Chapter 6 of my book. If you want the whole book, go to Amazon and buy it. It's called Protect Your Assets. But we're giving away Chapter 6 this morning. To get yours, again, call this number, 866-776-8328. Give me a call right now. Speak to a member of my team who's sitting there right now ready to answer the phone. Ask for Phil. Maybe he's around. Well, anyways, call the number 866-PROTECT. Again, 866-776-8328. Let them know you'd like Chapter 6 of my book, and they will email it right over to you. Coming up next, it is time for our popular They Say segment, where they say Social Security could run out. Is that true? Find out when I come back the latest information. You are listening to Protect Your Assets with David Hollander. That's me. We'll be right back.
Take the first step toward reaching your financial goals and get the information that can help you live a confident retirement. That first step is going to pyaevents.com and signing up for our next free event. That's pyaevents.com. Now back to Protect Your Assets with David Hollander, the Sandman.
Welcome back. I am David Hollander, also known around here as the Sandman, and you are listening this morning to Protect Your Assets. And people around here, they call me the Sandman. That's because I help my listeners sleep well at night by answering their most troubled tax, legal, and financial questions each week right here. That's because I've been running a tax, legal, and financial firm for over 30 years. Now it's time for one of our fan favorite parts of the show, our They Say segment, where we debunk common myths, half-truths, and sometimes, well, just bad advice that they say.
Who are they? What do they know that I don't? And what are they saying this week? Here's David Hollander, the Sandman's answer.
All right, so I hear this one a lot. In fact, I heard it last week from Eric. Here's the one they say. They say that Social Security just won't be there when you decide to turn it on, so you're going to turn it on now. Is that true? How is Social Security funded? Two great questions. All right, well, the trustees of Social Security just released their Social Security report on May 6th. Now, I already said you can go look at it yourself, ssa.gov. According to this report, the trust fund reserves will run out in 2035. So does this mean that Social Security will stop? Well, according to the trustees' findings, about 83% of Social Security benefits will continue after 2035. So again, according to them, no, that's not true. It's not going to run out a whole bunch, but you're going to be about 17% short. Now, preventing this shortfall will require some congressional action. I know what you're saying already. Can they get anything done? And would likely involve trimming benefits, or the other thing they could do, well, they could increase Social Security payroll taxes. Well, how is Social Security funded? That's a great question. Social Security is funded through payroll tax deductions paid by both the employees and the employers. You remember, you get that SSDI on your check. Well, you're paying into it, and well, your boss is doing the same. In 2024, the payroll taxes are applied to the first $168,600 of your paycheck. The Social Security tax applies to both employees and employers. It's split. So 6.2% of your paycheck goes in there, and 6.2% comes from your employer. So that's 12.4%. Now, if you're self-employed, which I know some of you are, well, guess what? You pay the entire 12.4% yourself on that $168,600. Okay? Now, when you contribute to Social Security, the money doesn't go to a specific fund that's allocated with your name on it. No, workers are paying into a system that then pays for the current retirees who have claimed benefits. So for every dollar you pay in, 85 cents of that dollar goes towards that Social Security trust fund, i.e. the Social Security benefit. The other 15 cents, where does that go? Well, that goes to the disability part of the equation. So those folks who are on disability and their families collect that 15 cents. This is all according to the trustees report. You can go pull this yourself. Again, ssa.gov. According to the trustees report, the Social Security Administration will run out of its reserves in 2035. And if Congress doesn't act, the fund will then only be able to pay out 83% of the full retirement benefit. Another thing that you should look at if you haven't seen this, you can go YouTube it. It was on 60 Minutes just a while ago. It talked about Social Security. Again, you can YouTube 60 Minutes and Social Security if you missed it on the channel. Basically, it was about a few different couples who received more from Social Security than they should have, and the mistake was made by Social Security, and they ended up owing tens of thousands of dollars back to Social Security without any real clear idea or process as to how they were going to unravel that. You see, Social Security is complex and it's difficult, and when it comes to paying taxes on that income, it can be confusing. Now, I know you've worked all those years, you've paid all those taxes each and every month, that SDI I was talking about earlier, the Social Security tax. You would naturally assume that income received in retirement from Social Security would be exempt from taxation. Well, unfortunately, this might not be the case. In some cases, I've seen individuals and couples pay taxes on their income from their tax-deferred accounts as well as taxes on their Social Security income. So the first thing you need to understand is how other sources of taxable income in retirement might affect your Social Security benefit, because there are strategies that you can use that can minimize, or in some cases, eliminate this unfair tax on your Social Security. This is complex. I'm just going to tell you this right off the bat, and I would encourage you to work with an accountant, a financial advisor who specializes in tax planning, or an attorney, of course, who also does this, to figure out what's the best way for you to do this. As a high level, I'd just like to give you some information that you could start thinking about as you start to prepare to collect your Social Security. Social Security looks at the combination of what's called your adjusted gross income. So this would be non-taxable interest income that you receive, you know, those 1099s. This could be half or up to 85% of your Social Security benefit that you receive. It would include distributions from a pension, maybe part-time work if you're still working, tax-deferred retirement withdrawals like your 401k, your IRA, capital gain tax, taxable dividends, and get this, even tax-free dividends are all included as part of your Social Security calculation. So depending on the total amount of your combined adjusted gross income, you may or may not be subject to having a portion of your Social Security income taxed. There are many accounting variables to consider when you think about how Social Security will be taxed. Here are some guidelines. If you're an individual and you make less than $25,000 of combined gross income, like I was just talking about, then your Social Security shouldn't be taxed. If you're between $25,000 and $34,000, again, as an individual, then get this, up to 50% of your Social Security will be included in your overall gross receipts and then therefore taxable. And if you make more than $34,000, well, over 85% could be included in that overall taxable income. For married couples, again, less than $32,000 combined, you shouldn't pay any tax on your Social Security. Between $32,000 and $44,000, well, about 50%. And as you get over $44,000, as much as 85% of that Social Security income could be considered taxable. So again, these are all estimations of what Social Security could be taxed when you get ready to retire. That's why it's super important that you think about how you're going to collect that Social Security income in combination with your other legs of your stool, if you will, your pensions, your 401k distributions, your capital gains, things like that. You want to look at all that before you pull that trigger. Call this number, 866-PROTECT, to find out how to get more of what's legally yours. That number again, 866-776-8328. If you want to find out how to collect more of what's rightfully yours, call this number, 866-PROTECT. Right now, we have live operators standing by to talk to you. Coming up next, what are some steps you can take right now to collect more from Social Security? Great question. Find out the answer when I come back. You're listening to Protect Your Assets with David Hollander. We'll be right back.
If you missed any of Protect Your Assets with David Hollander, all you have to do is go to pyaradio.com, where you can download or listen to our latest shows for free. Just go to pyaradio.com on your computer or mobile device when it's most convenient for you. That's pyaradio.com. Now back to Protect Your Assets with David Hollander, the Sandman.
Welcome back. I am David Hollander, also known as the Sandman, and you are listening to Protect Your Assets this morning. People around here, well, they call me the Sandman. That's because I help my listeners sleep well at night by answering their most troubled tax, legal, and financial questions each week. And that's because I've been running a tax, legal, and financial firm for over 30 years. That reminds me, if you missed any of today's show, because we've been talking about Social Security and how to get more out of it, then you want to go check out our podcast. How do you do that? Well, wherever you listen to a podcast, you just bring up the little search glass, you type in Protect Your Assets, and then you'll see two different little icons. There's one that has a little Sandman character on it. You'll see it's a little cartoon character with sand in the air there. That's the actual show. So this show, the Social Security show, if you go there, say Tuesday, you could search for Protect Your Assets and Social Security, and it will pull up this show if you missed it. And if you want to catch the market segment, we do a separate one for that, which has a profile picture of me. Again, Protect Your Assets market segment, and you'll see my profile there. And that's where we talk about the market and what just happened this past week, which I talked about at the start of this hour, where you can get my ideas on what's happening in the market. So that's called our Protect Your Assets podcast, and check it out. If you like it, tell a friend. Appreciate it. If you're just joining us and you're thinking about your Social Security, well, today's show has been just for you, as we've gone over some basics about how you qualify for Social Security, how you get your statement, how Social Security is taxed. Well, one of the first steps in approaching a Social Security strategy involves determining this term. Write this down: full retirement age. FRA is what we call it. Your FRA represents the age at which you can receive your primary insurance amount. It's another phrase, primary insurance amount, from Social Security. And this age is based on, well, your birthday. For example, if you were born March 5th, 1938, your FRA is 65 years and 2 months. Well, what if you were born in May of 1960 or later? Well, your FRA, it's 67. The reason FRA is important is because if you claim your Social Security before your FRA, then you will receive less money. And if you can wait past your FRA, well, then you're going to receive 8% for each and every year you wait past your FRA. Now, they do annualize that, so if you go monthly, again, you can get more by waiting. So let's say you were born in 1950 and you have an FRA of 66 years. You're single and your FRA Social Security benefit is $2,000 a month. Now, I'm going to leave COLAs out of this because, as you know, those do fluctuate annually and it's just hard to predict. So if you choose to begin, say, your Social Security at your FRA and you made it to age 70, well, at age 70, you have received $96,000. If you had started taking earlier withdrawals, say at age 64, well, you would have received $124,776. And if you started at age 62, that number would be $144,000 of total Social Security benefits. So looking at that example, it might appear that it's better to start taking Social Security earlier. Is that true? Well, not necessarily. In the example, if this person's longevity was 70, they knew that they were going to pass away at age 70, then, well, taking that option early probably would have been the best way to go. But what if he lived until he was 80 or he was 90 or longer? In these situations, the differences would have been reversed. At some point, and this differs for every individual, there's what's called a break-even point, where if you live longer than a certain point in time, then how you take your Social Security really does matter in terms of how much total income you can pull out of the system. So if you knew a couple things like your actual longevity, when your expiration date was, well, then it would make the decision much easier. But we like to ask you that question, and usually I haven't met anyone yet who knows, unless they really do know, and then it's not usually a good situation. But let's just say you have some idea because you look at your parents, you look at your siblings, you look at your health, you look at these estimations that are out there by actuaries. You try and figure out what it's going to be. Also, your attitude's important. Well, you look at all those things, and then you can figure out with taxes, etc., and your other income sources, well, roughly what that's going to be. In addition, when you consider your spouse, or what's also known as the survival benefit, this could be increased with delayed withdrawals if you were to die prematurely. Why is that? Because your spouse gets to continue on the highest benefit that existed before this happened. So yes, there are a number of variables involved in making these determinations, and the complicated nature of Social Security policies and laws, we recommend you get advice from people who are knowledgeable about this, so they can formulate for you an approach to Social Security retirement income. They can help you develop a plan on how you're going to take your retirement income out of that. And that plan should include the tax exposure, letting you weigh the pros and cons of taking it early versus waiting later. So get a solid understanding of your Social Security, the rules and regulations before you do it. It's just important. It's that important, and it does add up. So have you ever figured this out? How much money do you make in an hour? Well, it's easy. You just take your gross annual salary, you divide it by 2,080 hours, 40 hours times 52 weeks. So, for example, if you made $75,000 last year, you made about $36 an hour. I'd like to give a big thanks this morning to the Protect Your Assets team for putting together a great Social Security show today. Executive producer, network manager, Kevin Renfer. All my fabulous producers back there doing a lot of the heavy lifting. Phil, Dylan, Adrian, Lucas. Because without my team, hey, I'm just another pretty voice on the radio. Thanks again, everybody. You've been listening to the Protect Your Assets show. I am David Hollander, the Sandman. Have a great weekend and go out and make the rest of your life, well, the best of your life.
Investment advisory services are offered through Liberty Wealth Management, a registered investment advisor. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. The strategies mentioned are not suitable for everyone. The information expressed does not consider your specific situation or objectives and may not be appropriate for all investors. Past performance is not indicative of future results. To better understand the risk associated with investing and how it reacts to different market conditions, listeners should always consult with their qualified investment professionals, financial advisors, legal or tax specialists, and conduct their due diligence before making any financial decisions or taking any action. The legal information provided on the air is not intended to substitute for callers hiring their lawyers to advise them about personal legal matters. Investments involve risk and, unless otherwise stated, are not guaranteed. Liberty Group LLC paid for the following program, and the host's views and opinions do not represent those of the station or its ownership. California Life Agent number 048569. Persons engaging the services of one affiliate of Liberty Group LLC companies should be aware that each company is operated separately. You're listening to the Protect Your Assets Radio Network.